My name is Raktim Singh. I'm working in Infosys Finacle from 1995. Here in Finacle, we have touched lives of citizens across the globe because finance touches everybody's life. And to continue that process, we started this thought leadership platform, Inspiring Better Banking, the future of banking, where I'll be talking with industry leaders with their experience of what they want to give a message to the other people in the country, or what are the best practices they have seen, or the type of innovation or trends they see in the coming years. So, welcome to this platform, Inspire Better Banking, Future of Banking, where you'll be hearing a lot from the industry veterans. Hey everyone, in the Inspire Better Banking, Future of Banking series, today I had the privilege of talking with Mr. Sunil Kulkarni. Sunil is CEO of BCFI and he wears many hats. He has worked in the payments part in Oxygen company. I will say he was part of the payment revolution in India. So it's my pleasure and honor to today talk with Mr. Sunil Kulkarni. Sunil, welcome to our podcast.
Thank you, Raktim. And I think it is great to have, thank you for having me, and it's great to have this conversation with you. Just to give you my background and to everyone, I started with Siemens in 1986 for 9 years. There I was exited as in charge of semiconductor division, which is now buzzword in the tech industry. After that, I joined Motorola Mobile Infrastructure, and I was head of Mobile Infrastructure Business Development and Product Management till 2004. And 2004 is when I founded with my chairman a company called Oxygen, which in those days there was no word called fintech, or there was no word called startup. So you can say it was one of the first fintech startup way back in 2004. And the problem we were trying to solve was converting cash to digital. So what is being talked about, digitization, started by Oxygen way back in 2004 when there was no RBI guideline. And we built country's first mobile wallet called Oxygen Wallet in 2008 when there was no RBI guidelines. So retail payment solution, both B2B and B2C, is where I carried the company for almost 15-16 years. And then for the last 3 years, I am doing advisory to initial and growth stage startups, as well as banks, HDFC Bank, Airtel Payments Bank, and FinCare Small Finance Bank, and a project on World Bank as well, for digital banking, digital payments, digital distribution, and digital credit and digital currency. So that's what I do on that side. And for the industry advisory, I'm CEO of the BC Federation. There are about 65 corporate BCs and 5 payment banks. All of them are members, and they cater to almost 3 million BC agents in India, which is the last mile for most of the branchless banking operation. And that's where bulk of the banks are now going beyond branches. And we are seeing a lot of innovation happening on that side. So that's my brief introduction, Raktim. Thanks.
Thanks, Sunil. It's very impressive. And actually, that put the curiosity in my mind, as you said that in 2004 you started this thing. And I remember in 2004, at least for me also, the cash was king. And for all our normal transaction, maximum was something doing with the internet banking. But the way the payment revolution has happened. So, Sunil, what was the inspiration and what triggered for you? Because looking back at 2004, it looks, for me, as I said, it's a curiosity question. What inspired you to start this journey? Also, I will add, there are many other countries which are still have to join the bandwagon, and I think India has moved ahead in many parts in the fintech and payments. So, what was the inspiration in earlier starting this? And if you can tell what other banks, other countries should be doing who are either starting the journey or in their journey of the digital payment, that will be helpful.
Yeah, I think you asked the very right question. The fact that telecom and banking are connected, and this was no one can say that, could have said that in 2004. So what, and I'll tell you why it is connected now. So in 2004, India was undergoing the telecom revolution, very large number of acquisition of telecom subscribers. And even today, almost 95% of the telecom customers are prepaid. In those days, the prepaid was through a recharge coupon, a scratch card. And if you go to any shop, whatever you ask, most of the vouchers, you will find that there were at that time about 8 to 10 operators. And whichever voucher you ask is either not there or it's in short supply and all that. So, and the prepaid is end-to-end prepaid. And I'll tell you why it is relevant to banking, because even BC is end-to-end prepaid. There are no credits at BC. So, prepaid being end-to-end prepaid, the retailer never had sufficient capital to stock all vouchers, because you never know when somebody will come with a 1,000 rupee voucher or a 3,000 rupee voucher or a 100 rupee voucher. So he will only keep the fastest moving voucher, and rest of the vouchers were not being kept. So we thought that, we actually used a point of sale terminal to digitize these vouchers. So what we did was, we went to all the telecom operators and we said that, we'll sign agreement with you. Instead of giving us physical vouchers, you give us e-vouchers, which is e-pins. The value in the prepaid is in that 16-digit code or 12-digit code, which is when you top up, you enter that code and it becomes a prepaid voucher. So we said, you give us these, we set it on a server, and we created a complete end-to-end tech platform where at the retailer, there was no physical inventory. He was keeping a point of sale terminal, and that point of sale terminal had different voucher code being written by our software, and any customer comes, he will give cash and he will dial up my server, download the e-voucher and print it on demand. So this was a inventory on demand. So since we were keeping the whole country's inventory, there was no question of not having any particular voucher at the retail end. So much so that in those days, Reliance launched their own services, the Reliance Anil Ambani earlier. So they had Reliance stores and they did not have voucher. They will say, go to Oxygen outlet. They will give you the voucher, because we were keeping inventory at the central level. So what did we try to do? We actually did, the business model of Oxygen was, retailer did not need to carry that inventory of vouchers. He was carrying with us a cash prepaid inventory. So he gave us cash, and that cash was fungible across Airtel, Vodafone, Idea, Reliance, everybody else. So suddenly his inventory went down from 100% to 20%. We actually gave them 1:5 ROI, better ROI because of this, and that's how the Oxygen became a very disruptive element in the financial services for telecom recharges. And from there started the e-top up, the bill payments, the travel ticketing. All this started after we solved the problem for basic need of a prepaid voucher. Now that same thing now today for a business correspondent, if he wants to do cash in, if he wants to do money transfer, he needs to have a prepaid cash with the bank, and only by debiting that prepaid cash, the bank authorizes the transaction of a money transfer or a cash into any bank account. So the same concept of what happened with prepaid services is now being carried forward by bulk of the corporate BC using POS, using PC, using mobile app, and using all kinds of other terminals. So basically, I would say Oxygen was the flag bearer to carry the fintech revolution from prepaid mobile services to financial services.
Thanks, Sunil. This was a very insightful use case what you told, the connection between telecom and fintech. And I believe this was a real problem. And again, this is a problem I'm assuming will be there in many other countries also. This need to get solved. And the way you have told that today also for the business correspondent, this issue of having a prepaid money, and that is where the utility of this digital money comes into picture. That brings me to my next question of CBDC, central bank digital currency. So we have seen UPI where the payment goes through the bank. No banks are involved into the transaction, and now we are attempting with CBDC where digital money will be there in my wallet and I can transfer to other person. Do you believe this will be the next disruptor, and what all the other innovation can happen around CBDCs? Your views?
Yeah, I am personally in favor of CBDC, and I do believe because it is being launched by a regulator, it will be going through its own pace, because unlike any fintech or any other banks, a regulator takes very cautious step on CBDC. They started with 8 city pilot, they roped in 7-8 banks, they are now bringing other banks. So I'll first tell you what is the problem and how the problem was solved. So if you look at UPI, UPI solved one big problem, and one of the biggest problem of UPI that UPI solved was the internet payment gateway. The transaction success rate was very low, and you are using user ID, password, and every internet payment gateway was a separate UI UX and separate integration with the bank's backend, because you will not be allowed to enter on third party user ID and password. You have to go to the bank's payment gateway. In case of UPI, the UPI library brought on one app a completely encrypted, secured user ID password information that can be entered. And it was made easier for the customer that your mobile number @ your VPN, etc., and your password is, let's say, your UPI PIN. You can use anywhere, because the UPI library that is being given with any of the mobile app, whether it is PhonePe or an ICICI Bank or SBI or Paytm or anybody, that UPI library is common and is given by NPCI. And that's what the banks trusted, and therefore you are able to enter the user ID password on an app. So from PC, the transaction moved to mobile, and today you have more number of mobiles. Today, if you look at WhatsApp, there are about 500 to 600 million monthly active users of WhatsApp, which means you have smartphone, you have mobile data enabled, and you are able to converse on that. So 600 million, we still have, if you look at monthly active users, maybe between 200 to 250 million monthly active users for UPI. So there is a vast market to go beyond UPI from 250 million to say 600 million. The UPI transaction created one of the biggest problem to people like you on Finacle or TCS banks, simply because the core banking of most of the large CBS were not meant for very large number of micro transactions. They were actually meant for a very large number of transaction of a money transfer of 2,000 rupees, 5,000 rupees, 10,000 rupees, etc. Or the classical deposit and liability software, which was, you create an FD, or you have a loan, you have loan repayment, etc. It was not meant, or it was not created, or at least not designed for a 10 rupee debit 10 times in 1 hour. So what happened is, when 200 million or 250 million customers started transacting, it created a tremendous stress on the core banking system of all the banks, and banks did not upgrade their core banking backend to cater to this kind of transaction velocity. I am talking about concurrent transaction. I am not talking about number of transactions. So if there is a concurrent transaction of 100,000 in 1 minute in a particular core banking system, no amount of velocity or no amount of capacity can do justice to that core banking, because it was, and to be fair to all the CBS vendors, it was not meant to build that. So UPI Lite was brought, where you are able to bring 2,000 rupees worth of transaction on mobile app, and there is a one debit of 2,000 rupees, and then you are able to do small debit which is not touching the core banking. Once you are completing that 2,000 rupee, again it is a fresh load of 2,000 rupees. So you are reduced the 10x transaction to, let's say, 1x, because let's say your average transaction size is 100 to 200, 2,000 you are able to do 10 transactions, whereas on core banking you are debiting still once. It is still, I would say, constantly touching core banking. Now 2,000 can become, let's say, 3,000 over a period of time, or 5,000. What CBDC is doing is two things. One is, when you withdraw cash from an ATM, you are withdrawing cash, and after that you are not touching. That time there is a CBS debit, and after that there is no connection to CBS after you have withdrawn the cash. CBDC on mobile app does exactly the same thing. When you withdraw from any bank CBDC on your mobile app, after that, if you are making payments, you are not touching CBS. There is no going backward loop to CBS whatsoever, unlike what is happening in UPI Lite. So CBDC first is going to bring further relief to the micro transaction, because today the government has realized that unless we are catering to a reliable micro transaction, which to a larger extent UPI and UPI Lite has done, CBDC will further do it, because now you are replacing physical cash with digital cash. And to top up that, they have made this particular digital cash interoperable with UPI. So even if your merchant does not have a CBDC, and you use a CBDC to pay on a UPI QR code, the money will go to the bank account of the merchant. It will, and if he has a CBDC app, it will go to the CBDC. So you're actually changing physical currency just like a digital currency, just like physical currency. So the second bigger portion, which is to a larger audience, is that it brings the same amount of anonymity. Today, the UPI, every transaction trail is there, and some people like it, some people don't like it. And I don't think it's a question of taxation and evasion. There are people who don't want to be tracked for good reasons, and therefore, for physical cash, the amount of anonymity is there. Same amount of anonymity has been brought on CBDC, so that people are free, and once you are downloading, then you are able to do transaction the way you want. So to a great extent, it is not going to disrupt instantaneously the current UPI and UPI Lite. But to me, if today I have to deliver cash in villages, physical vans are required to deliver physical cash. Can I replace physical van and physical cash with digital cash to these villages and have these customers pay on UPI QR code? That is the answer. That CBDC has a larger application in suburban and rural than in urban, because urban you have ATMs, urban you have smartphones, urban you have UPI QR code. But as soon as you go from urban to suburban and rural, your cash requirement starts going up, and that's where CBDC will become, over a period of time, disruptor and would be complementing UPI Lite.
Thanks, Sunil. Very excellent example of what I gather. What you're saying is two things. One is it will surely bring down the cost of this transaction dispersal, and that eventually will lead making those micro transactions very easy, because at the moment those micro transactions, when you have to pay on a small amount, and especially as you rightly said, once we move to the villages and suburban areas, those small transactions can be done. And instead of taking a van for disbursing the cash, maybe through this mechanism we can disburse cash, government can do it, and I think that eventually will lead to the financial inclusion, which is the aim of every country and all financial system will want. So that's That's important. But Sunil, then I'll put one thing here that if we see, of course, we have taken UPI and the payment, but online commerce, I'm a little bit moving in that direction. We have seen that the online commerce shares in the overall commerce, what happens, let's say in our country, is around 7 to 10%. So in a way, it's good. Things have doubled, I will say, over the years. Many people have become comfortable, start doing, but there is still a big scope because 7 to 10% of the overall commerce, if digital commerce is happening, it also put a worry. What can be the reason and how we can improve that number? What are your views on that?
Yeah, so it's a very related question, simply because as I told you, about 200 to 250 million monthly active UPI user. Why are the balance 350 million WhatsApp users not going on the UPI bandwagon? Because if you take the gross UPI users, not the monthly active users, they may be around 350 to 400 million. Because between PhonePe, Paytm, Amazon Pay and Google Pay, tons of cashback and promotions have been given to incentivize to customer to use UPI. And that's why you have such a large UPI base. But there is somewhere still, I talk to people right from all strata of society, and they say somewhere they don't want to touch their bank account on internet because of cyber fear that, maybe my account is compromised. Now, if you see, there are billions of transactions happening on UPI, and there are very minuscule frauds which happen. And bulk of the frauds are collect frauds, not the when you use a QR code on shop and you make payment, there is no fraud happening there because you're in front of the customer. But if you get a call that use your UPI pin and then do that, so most of these frauds are collect frauds. When you do that, suddenly even most literate people also get cheated, and that's why a lot of people say that how they solve the problem. They say, I keep two bank accounts. In one bank account I only keep this much money, and that I use it for UPI. So people don't touch their salary account. Same happens to other customers for their benefit accounts in the villages and the suburban areas. The benefit accounts people don't want to touch because every month's salary or benefit is coming there for the welfare of the customer. Till the time we are able to bring that comfort, and that's why CBDC comes very handy, that instead of using my mobile across multiple websites for UPI or any payments, I just download CBDC and I am able to now pay using CBDC. Once I have downloaded CBDC, I am disconnected from my bank account. Now, that education is still not there because it is still in pilot. As soon as you download or as soon as you withdraw money from ATM, you are detached from the bank. Do you agree?
Yeah.
If you do that, then after same way, once you download currency on your mobile app, you are disconnected from your bank account. So you are now having a peace of mind that if I have downloaded 5,000 rupees worth of CBDC, my risk on this particular transaction is not exceeding 5,000 rupees. You can't say that when you are accessing your bank account, because that entire bank account is subject to cyber risk. So as we have progressed in digital payments, and India is probably number one in digital payments, we are also currently facing some of the challenges of the cyber fraud, which is being addressed to in the right way, whether it is UPI frauds or it is Aadhaar frauds or any of those frauds. They are being addressed to with highest intensity. But for a common man, it actually is a deterrent, and therefore some of these methods like UPI Lite, which again is a stored value wallet, and CBDC, which is a full wallet currency, is a method to tell the customer that, look, you downloaded 1,000 rupees, your risk is 1,000 rupees. Go ahead and do the transaction. Now you can do cash on delivery on CBDC, where even before the transaction has happened, you actually can pay through CBDC. You can't pay physical cash like that. So a lot of such innovation will happen where if you have CBDC, you can pay online using CBDC. You can't pay online using physical currency. So these use cases are still to be built as the CBDC progresses. And therefore, I am saying that the third biggest case of online commerce is that today, while we are talking about currency, ONDC is the next disruptor. Because what has happened is ONDC as a protocol now has buyer and seller and buyer app and seller app connected through a very standard protocol, which we call it as beacon protocol. And what they have done is they have bought also the logistic as another service, logistic as a service. So today when you go to Amazon or Flipkart, everything is bundled under one particular service, which is seller only uploads his inventory and rest of the things are taken care of by Flipkart and Amazon. But in case of ONDC, potentially it is opening up all the interfaces. Logistic, which logistic you want, seller, who is the seller and who is the buyer. So it is not just because today, whether you do Swiggy, Zomato, the concern that has been raised by some of the retailer is we are not visible to end customer. So it's only Swiggy and Zomato which is visible to end customer. Secondly, we are paying very large amount of margin to the aggregator, which is Swiggy and Zomato. I would rather give cashbacks and loyalty points to my customer if I have access to customer directly. ONDC brings that, and ONDC not only will do this for urban, it will go further to rural and suburban, simply because as we speak, ONDC is bringing financial services also on the pipe. So one is e-com and second is financial services. If the pipe becomes common, then it will proliferate. And if you proliferate the pipe to suburban and rural, then even e-com will go. We were talking about 1.2 or 1.3 trillion dollar retail payments and only 10% is e-com. So that if you increase it by another 10%, we are releasing another $130 million worth of e-com into that. So clearly, since the base is small, these are the real disruptive innovation which are, by the way, happening only in India. UPI, ONDC and CBDC. All in one go. No country is doing this. So there is a method behind this madness. And that madness is that somehow we have to include the smallest customer with the smallest transaction on digital. That's what the bottom line is, Raktim.
Wonderful. And I think what you said will resonate with many of us, starting with, I know some of my friends who are actually maintaining two accounts, as you mentioned. Reason being, one account is linked with whatever I do on internet, that's how it's called, and other is where my other amounts are there. And when this fear is there among my friend, I can totally relate what you said about small merchants, people living in away from the main towns. Surely that fear will be there that there can be cyber attack, there can be problems, but the way you describe beautifully that you withdraw fiscal cash from the ATM, after that much money you have in your hand and you deal with it. Like that, with CBDC also, you get it from your bank into your wallet. And now you are like, what about $1,000, 1,000 INR, whatever you have taken, and that way foolproof. And thanks for touching on the ONDC part, because I think that is a big revolution happening again here, where unbundling of the values, all the things have come up this way. That will, and yeah, you rightly said, I think we are living in exciting time where UPI, ONDC, maybe OCAN also I will add to it, and this central bank digital currency, everything coming together, that will help all the sellers also. And yeah, good point of maybe those small sellers can give the cash back instead of giving that money to the aggregators. So I think that's really wonderful, and you have really captured what all is happening in India. Any other message you want to give to the other countries based on your experience? As I said, like I can see you have been there, started on the payment journey when we have not thought of it. I think now you are already there at the forefront of this ONDC things and other part related to it. So, like, what other countries can draw message when we are able to do it? Surely they will need the technology and know-how of that. What else could have been the challenges or they can face from this platform, if you want to tell?
Yeah. So I think the message I wanted to give is that payments is the starting point. Payment is the starting point simply because if you look at India also, India is largely credit starved. It's a largely credit starved country, and bulk of the innovation in urban have happened for what I call as consumption financing, which means you want to buy a fridge or you want to buy a mobile, you have an EMI, you put your POS terminal and you are able to get interest free, which is subvented by the Samsungs and the Apples of the world. But the livelihood financing, which is the trade financing, where you are adding to the GDP, of course, the consumption financing adds to the GDP because it is fueling up demand. But rotating that money, if you get 100 rupee and you are able to convert with value add to 150 rupee, you added 50 rupee to the economy. And you are making a livelihood out of it, and therefore that will require capital to be given to MSME. The bulk of the payments journey, people don't realize that if you are only doing cash transaction, it becomes very difficult for any bank or financial institution or NBFC to provide credit and still feel comfortable, because we are talking about not secure credit. Secure credit is, you have your property, you have your land given, and then every bank will give you credit. We are talking about cash flow based financing, that I have this cash flow, I am doing this transaction. These transactions are used not for liquor or playing games. These transactions are used for paying my electricity bill. I am doing it for buying urea, or I am buying something which is used for trade. That over a period of time, the payment profile will lead to what is called as quasi credit rating, and that quasi credit rating is going to be much stronger than the traditional credit rating that we have today with the credit agencies, because that is for all the customers who already are taking loans, etc. But for first to credit or first to bank or any new customer, this is very tough, and that's why you have these self-help groups and joint liability groups, because the banks and financial institutions are trying to ring-fence their risk. The moment we have $101.3 trillion payments, which is happening today with cash, converted to digital, we will have a much different world on credit. Banks will be much more comfortable granting unsecured loans. It could be even a 15 days loan or 30 days loan or even an OD. That would be easier to do because cost of collection, cost of disbursement and the underwriting becomes easier. That's where the account aggregator, the fourth disruptor, account aggregator as a method will come very handy if you have payment profiling, because you know where the money is coming in, you know where money is being spent, you know what is your GST data, you know what is your mutual fund or income tax data. So the more you get transparent in terms of, I'm talking about MSME and later on consumer also, the more transparent you are to the bank, which is without cash through digital transaction, the more you will be able to prove to them that I am credit worthy. Today that doesn't happen. So the more you are able to show that you are credit worthy, the more it will flow to you and you are able to make use for your trade and livelihood. The economy and GDP will constantly grow up. So that's the message I'm giving, that payments should not be looked at payments. Payments has a much larger thesis behind payments, and that is to make the entire country and economy grow basis credit financing, which are predominantly unsecured.
Yeah, it's really exciting. What you said is that that variety of the things, be it a UPI, ONDC, OCAN, or the credit history getting built, or we taking the use of account aggregator, which is Sangathi, what we call here. So the more unlocking of value and the reduction in cost of various things what we do, I think historically we know then when that happens, that is for innovation. And the micro loan what you talked about, or the short tenure loan for the variety of the purpose, without hesitation bank will able to give. I think that will spur the overall economic growth and a lot of innovation, and where we can be the leader. So yeah, it's a really exciting time. So Sunil, what you're looking forward in 2024 in fintech technology or in financial world? We have talked about, of course, the UPI and CBDC, ONDC, OCAN, account aggregator. Apart from that, what else, in your view, could be the trend in the technology sector as well as in the fintech sector, which we should watch out for?
Yeah, so I would say two fronts. One is on the front where you are there, core banking. So I'll give you an example, and then you can say how it can be correlated to. And since I will always compare it with telecom started with fixed line switches. Fixed line switches were landline switches. They were with Ericsson, Lucent, Siemens, Alcatel, Nortel, and Nokia started with only mobile switch. They did not have a landline switch. So when mobile switch came, a lot of these landline switch provider created a wrapper around their existing landline infrastructure and created a mobile switch. Now that was not efficient because you are creating a wrapper around a landline switch, and therefore you now see all these companies put together have become one company, Nokia. They have acquired Siemens, Motorola, and Lucent, Nortel. They all combined one, and Ericsson is the only one. Because Nokia saw that mobile needs to be designed grounds up. Similarly, I would say in the next 2024, 2025, cloud CBS and cloud CBS need to be built grounds up. You cannot build a wrapper around Finacle and say this is cloud CBS. It will be there, but I think what Infosys, TCS, Fiserv need to work is to identify this particular thing, that cloud CBS, if we don't build, we will have similar issue as we had in fixed line switches. So, and I'm sure you must be building that. So, because I don't need to tell you, because as soon as the cloud CBS is being built, today the product in the market, fintech product in the market, is hostage to how fast you can customize to the CBS. And that needs to change because product life cycle is shrinking in fintech from 12 months to 9 months to 6 months to 3 months. And if we don't do those changes in our ability to do product innovation at the CBS wrapper level, then we will be always be looking at suboptimal innovation between the two. That's on the CBS side. So I'm sure a lot of work is happening. There are a lot of companies who are going for cloud CBS, and I'm sure your company, you being the pioneer in CBS, will also be thinking in those directions. The other thing is, today we have 1 billion cards which are debit cards. We have only about 90 million credit cards. So credit card is a very small portion of the total cards. If you look at it, the way the innovation is happening is that today now on UPI you can have credit line, and therefore I would say that even in the MSME sector and consumer sector, secured credit card in 2024 will be a very large innovation happening, where you put an FD, against FD you get a credit card of 90% of the FD value. So it is actually like a secured credit card. So there are no problems for any bank to look at CIBIL or Experian to say whether what is the credit rating, because it's a secured credit card. When you have secured credit card, people will be able to make use of that credit card much beyond. And so it's like a credit line to a consumer, or I would say a sole proprietor. He gets a credit line. He currently has to go and sign so many documents to get a credit line from a bank. So micro credit line using a credit card, which is a secured credit card, will be one very large innovation which will be happening. There are 2-3 companies I know who have already got funding for this particular product and are rolling out with banks, because banks themselves cannot offer this credit card as fast as these fintech. So there is a real collaboration happening between fintech and banks on some of the products which I talked about in the beginning, that credit and making this credit for livelihood, not for consumption financing, livelihood will flow, and your e-commerce again through credit card, secure credit card will be easier to do compared to cash on delivery and anything else. Because on credit card, if you don't like the product, if you want to reverse the product, you can give chargeback. You can't do that on debit card. So that's a problem which we have. So I would say that on the fintech side, one is the CBS and the features and functionality, how fast we can deliver the features and functionality to the market will undergo like fixed line and mobile switch in telecom. And second is on the secure credit card side, we will see a lot of innovation coming in 2024.
Yeah, so it's you rightly said that any wrapper, like if I take your first point of when we try to put any wrapper, it doesn't work. And I think here also what we realize that just porting on the cloud doesn't work. It has to be cloud native. That only gives the agility, that only gives the speed, because otherwise things will crumble. So we also had realized and done the cloud native part, and that so that it helps the bank or the financial world who is using us to launch new product quickly without always coming to us because a wrapper was built. So that point is well understood, and I think it's a very apt point for all of us who are there in the technology world. When you said that if the wrapper was put in telecom industry, it has not worked, it has crumbled, and if we try to put wrapper here in any of our things also, it will not work. And it has to be native, and that is where the speed will come. And I like your example of the credit card, the secured credit card, what you mentioned, and that way, yeah, we have a very less credit card in India that way. There are benefits of that, but adoption has not happened. But the way you describe that, yeah, there is now credit line available on UPI, and the innovation can be done like that. That will surely again help many more people joining the digital bandwagon, which is what I say, and is for the overall growth. And I believe that will be the win-win for everybody. So thank you, Sunil. It was really insightful discussion. I have learned many new things here, starting with what journey you told about of the financial world and the telecom and the similarities. And I think we have also ended here. Also, you've given the similar example that any wrapper doesn't work. It has to be native, and then only you get the speed and agility. So thanks once again. It was a really wonderful discussion. I'm sure our audience will also love it. So thanks for your time. Thank you.
Thank you, Raktim. Thank you for having me. And I also enjoyed the discussion and your questions. They were quite interesting questions. Thank you very much.
Hey everyone. I'm sure you must have enjoyed this conversation with Mr. Sunil Kulkarni. We have touched upon on various topics, be it UPI, CBDC, ONDC, OCEN, or account aggregator. And I think that gives a good sense of what all is happening, the innovation part happening in this fintech area. So we have learned a lot here today, and my goal is that going forward also I'll be talking with more industry leaders with their experience, with their insights of what all is happening now and what will happen in the coming years in the areas of fintech and technology. So join me on this platform again, Inspire Better Banking, the future of banking, and looking forward to meet all of you here. Thank you.